Well, shares of Delta Airlines falling this morning after reporting full-year guidance that disappointed the street. I spoke to CEO Ed Bastian ahead of these results about the company's outlook for fiscal year 2024. Here's what he had to say.
We're looking for the year to come in at between $6 and $7 a share. We've had some delays over the course of the last couple of years in the supply chain. Maintenance costs are higher, as well as the performance, the turn time performance is also slower, and salaries and inflation have also been much higher than was anticipated a couple of years ago.
Bastian continued to say that he feels good that the company could get to that $7 number next year, but that doesn't seem to be enough for the street as of right now. Street also factoring in a few other things. Let's bring in Peter McNally, who's the Third Bridge Global Sector Lead for Industrials, Materials, and Energy. Peter, great to speak with you as always here. Would love to get some of your insight around what the street might be fading within this report here.
Well, I think it's the realization that after 3 years of a strong recovery, we're leveling off here, and I would say for Delta specifically, they actually have a few things going their way that other airlines don't. Like, one, they're not incredibly dependent on deliveries of new aircraft. I mean, sure, they have some, but expectations for the number of seats aren't quite as high as others. Two, they've got a pretty good maintenance program. While there is inflation, and delays on this stuff, Delta's a bit more immune than their competitors, given this Delta Tech Ops business that they have. It's a fairly unique asset. So I think this is the start of investors just realizing that, hey, this is going to be not a super great year in 2024. But still pretty healthy. So we're seeing a sell-off this morning.
So when it comes to the reaction, is this maybe a bit of an overreaction to some extent, especially if maybe Delta is better positioned than some of its rivals within the space?
Well, the shares have just kind of been in the middle of this like 32 to 47 range. Maybe we're getting a little high on that. Now it's just coming back in the middle. And things will settle out as we go forward. There are some threats, particularly in the domestic market, where a lot of capacity has been added. But Delta is not wholly tied to that. The upside is if we get a full recovery in Asia and more than just one really good summer in Europe, which drove the results this year. It was a big factor getting that recovery. If those markets continue to go, Delta's in a pretty good position. But there are some things really weighing on the U.S. leisure travel market that are going to hit some airlines that haven't performed as well, more so than Delta.
Peter, in my conversation with Ed, he reminded that this is not a company that operates the MAX currently. They do have deliveries set for 2025 for the Dash 10. However, they did just announce a massive order as well with Airbus. So all these things considered, where might we be starting to see some inclinations of shifting sentiment from airline operators, even in the wake of what took place with Boeing last weekend for some of these large plane orders?
Look, demand has not been a problem in this industry. It's actually meeting that demand with supply, is getting the right number of planes in the right place at the right time to serve customers, right? So that's a pretty healthy backdrop. And I think Delta this morning is backing that up with 20 new orders of the A350. So, that has not changed. But what happened last week for Boeing, and I know it's getting a lot of airtime here, is just one more example of the supply chain problems in this industry. It is the one big industry where these things haven't been solved. There's plenty of inventory around for semiconductors and cars and things like that. But getting aircraft is difficult. And, it's not just a Boeing problem. We saw this summer, the Pratt & Whitney 1100 engine, has to go in for service of these newer engines. And a lot of those are found on the Airbus A321, which Delta does fly. Where Delta has an advantage is, again, this Delta Tech Ops business that they do have. They can service it themselves. But other carriers, let's just take JetBlue as an example, they have to contract somebody, and those people are really busy, and it's going to take time to get those planes, inspected, fixed, and back in the air. So those are just some of the challenges that are ongoing. I know the 737 MAX 9 had a very high profile, issue last week. And thank God it didn't end in, tragically.
Yeah.
But it is just one example of the supply chain challenges in this industry.
So, Peter, talking about the supply chain challenges, talking about the fact that a number of these challenges happen time and time again, although this circumstance, the situation, obviously very different than what we have seen in the past. But when we talk about that being such a big headwind for these airlines, is there any light at the end of the tunnel? Or when you talk about the fact that this is a challenge, for how long and to what extent is that going to hold back future earnings?
Well, the experts at ThirdBridge have pointed out that these issues really are happening on new aircraft. It's companies with well-maintained, reliable planes that work that they're doing well and they're meeting demand. It's the expectations of growth is where you run into trouble, and delivering that growth is going to be the hardest thing, in this industry. United was the most aggressive of the major airlines in 2023 in terms of getting more planes and meeting demand. The middle of 2021, they placed a big order, biggest order in the company's history, with Boeing. And they didn't quite get enough planes in 2023, so they cut expectations. So these are this is the big challenge. When you're reliant on new planes, that's going to be the most difficult part of the industry.
Peter, we heard some of the buy on the dip mentality reemerge towards the tail end of 2023. Is this a dip that investors can feel comfortable buying into with Delta shares here today, as we're seeing them down by about 6%?
Well, look, I think it's going to get pretty choppy for the rest of the industry. Delta's got a few things going their way longer term. But if you believe in the international recovery, and you believe that Delta is going to be able to maintain their planes, which, the track record is pretty good, they're likely to outperform their peers. Some of the peers are going to struggle a bit more in getting new planes and having maintenance work done. And again, the leisure travel in the U.S. is seeing some pressure, okay? That there have been planes added into that industry and pricing has started to roll a bit. But again, if you believe international and the ability to keep planes running and in the air, Delta's not a bad spot.
All right, Peter McNally, always great to get your insight, especially on a day like today. Thanks so much for taking the time to join us here. ThirdBridge, a global sector lead for industrials and materials as well as energy. Thanks, Peter.
Take care.